What's going on, guys? Mike, aka Crypto Jewels. I'm going to do an educational piece on trading, entries, exits, and stop losses. So, guys, I'm not a financial advisor. I do this for entertainment and educational purposes only. This happens to be an educational piece. I ask on Twitter a lot about your guys' risk management strategies, and it seems like nobody really has one. So risk management, if you're trading, and even if you're a holder, is an extremely important thing. You know, the last thing you want to do is just blindly buy something and hope that it's going to go up based on just, you know, your narrative and your opinion that it's going to go up. You know, you want to have a planned trading strategy that you have in place with proper risk management and knowing where to place your stop losses. That way, if the trade does go against you, you know, you get out of it with a couple percent loss instead of, you know, just holding and hoping that it turns back around and hoping that it gets up to where you bought at. So you can either get out or hold again and hope that it goes to where you originally thought it was going to go. If you do have a stop loss strategy and a risk management strategy in place, then it allows you to, you know, minimize your risk, obviously, which is extremely important because nobody wants to lose money, but also re-enter. You know, if you still like the asset and you still like the chart, it allows you to re-enter at a more optimal price if the trade does go against you. So it's important to understand that, and it's important to develop your own risk management strategy. I'll dive into my strategy. I'm just going to give you guys one of them, just a simple strategy that I trade. This was my favorite strategy and one that I like to use over other ones if I see them available in the market. And I'll give you guys a real example here in just a second. But if you guys follow me, you guys should know that this is a 1, 2, 3, 4, 5 Elliott wave structure. This could be a complete cycle, or this could be a, you know, a one wave, a micro one wave of a, you know, macro 3 wave or whatever. So let's just look at this structure right here. So you've got your impulsive wave 1 up, and then your corrective wave 2 down, an impulsive wave 3 up, a corrective 4 down, and a impulsive 5 up. And guys, don't get this confused. Don't get corrections confused with only being down. Corrections can be up. It just depends on the direction of the trend, and it depends on, you know, what direction this impulsive wave is going. If this impulsive wave is going down in a bearish direction, then these corrective waves are actually up. So that would look something like this. So in this scenario, you have your 1 down, you have a corrective wave up, you have a 3 down, you have a corrective 4 up, and you have your final 5 down, and then you'll have a correction up. So just don't get that confused. But how do I look for entries? So if you believe you have a full, you know, let's start here. So this one wave would be comprised of 1, 2, 3, 4, 5. So this wave is comprised of 5 waves. And then this 2 wave is comprised of an A, B, C, or it could be a complex correction, but just for ease of this video, this could be an A, B, C. Creating your 2, and then you'll have another 5 wave structure up to create your 3, and then a 3 wave structure down to create your 4, and a 5 wave structure up to create your 5. So that's how this thing works. So once you guys believe that you have a 5 wave structure up after an ABC correction, so you've got, you know, you would have some sort of an A, B, C corrective here. You believe your correction's over. You see you have a 5 wave structure up, creating a micro 1, where my favorite trade is buying 2s and trading 3s and selling 3s. So if I was going to look at this trade and I believe that we topped up here at this level and I'm waiting for a corrective wave, I would look from a fib standpoint, take your fib retracement tool from the bottom of where wave one starts to the top of wave where wave one finishes. And then I like to enter wave twos at 618, this Fibonacci level right here, 618, 0.5 to 618. Depending on the asset, depending on the scenario, I might dollar cost average in, by 25%, 50% of whatever I'm allocating toward this asset at 0.5, and then finish the remainder of, the 50% of that at 618. And then I would place a stop under, hold on, let me get this off here. I would place my stop under where my wave one starts, because your two wave cannot overlap into your one wave. If your two wave ends up going like that, then that count is invalid and you've got something else going on. So that is that's a rule of Elliott wave that cannot happen. So if you enter the market here, place your stop underneath where your one started. That way, if the trade goes against you, you get out here and then you can figure out what's going on with the count and look for a different entry. Now, assuming this thing reverses, and this is a correct count, you've got a 5 wave up and an ABC down, I will target my 3 wave. So that's where my sell target will be. To find my target price, you take your fib extension tool, which is up here, put it at the bottom of one, top of one, down to where your ABC, the bottom of your 2 is. I target 1618. So 3, 1618. This is around where I would sell. I will start. I'm not just going to, for me personally, I'll sell half of, 50%, 25%, whatever. I'll sell a portion of my position as it continues to go up. By the time it hits 1618, depending on what this count looks like, guys, I'm not going to get into those details, but typically if this is just a normal 3-wave structure or a 5-wave structure here, and there's no wave extensions or anything like that, then I will be 100%. I'll be probably 75%, 80% out of my position by the time it actually hits 1618. So I will, just like I can cost average into my 2, I will cost average out of my 3. And then, you can potentially play a 4-wave, but we're not going to get into that. Let's look at this on a real chart here. So this is the Uno chart. I actually just took a trade on Uno this morning, but I'm going to show you guys. So here's what we've got. Without zooming way out, I believe we have a final ABC wave down here. So here, let's take a peek at it. So I believe this is an AB, and then this is a C, which is like we talked about here. So you got an ABC. So I believe this is the bottom of a correction of some sort. So I'm looking to enter a trade. So because I did not enter this trade here at the bottom of this C, I will wait for a 5-wave structure up, which happens to be this 1, 2, 3, 4, and 5, and then an ABC. So this is where you could enter this trade here at your C, which let's check the fib levels on this one to see how it ended up. So you got the bottom of your C to the top of your 1. So this actually ended up going below 618, just, barely, briefly, and then went up to finish your 1. So if you did not like that trade because it went below 618, it obviously did not come down below your 1. So that would have your stop never would have hit if you would have bought at 618 here at 325. Your stop never would have hit, and you would have been in profit, and you could have sold your 3-wave, or you could have held it until your entire 5-wave. But let's say you did not buy there and you wanted to wait for a 1-wave. So you've got this one here. Let's throw the fibs on this. So this is your sub micro count of your micro 1. I mean, you can enter any trades anywhere based on Elliott wave. So take your fib from the bottom of one to the top of one, which is right there. And this thing hit the 2 wave, hit pretty much dead nuts on 618. So that would be a great entry right there. Your stop would be right here below where your 1 wave started, or you could obviously put your stop below this, where because this is your larger degree trend. This one here is your larger degree trend. So this entire count, this one count, is invalidated if price comes below this C here, which is where the origin of your one started. So you could place a conservative stop under where your one started here for this micro structure, this sub micro structure, or you could place your stop below here of your more macro, your larger sub degree, your larger trend. You could place your stop there as a more liberal stop. You're going to lose more money, obviously, if you put it here. Let's see, from a percentage standpoint, if you entered at this 2 at 618 and put your stop underneath there, that's a 16% loss. So that's pretty liberal. I mean, it depends on what your risk tolerance is, or you could have placed it here below your 1, which is about 4%. So that's more palatable if you're trading. I mean, you don't want to take a 16% loss really ever, but I guess it just depends on what your risk management strategy is and what your risk tolerance is. So that's up to you guys. But so that would have been a perfect 618 entry right there on your 2. Let's throw the fibs on it from a trend-based fib extension and see how this thing ended up playing. All right, so from your 2, it ended up wicking above 618. So this is your trend-based fib extension. So if you would have bought 2 and you targeted your 3, this would have netted you, if you sold at the top of your 3, about 16%. All in a matter of, what's the time frame on this? Let's see, date range. This is a 30-minute chart. So if you entered here on this 2 and then you exited up here on this 3, that is a 6-hour trade and you make 16%. Not bad. So that's an example. And then again, of course, guys, you can extrapolate this out as far as you want. So if you got this one here, say you missed this one as well, and you come to this chart and you're right here. So you've got this entire wave 1 structure up, well, you've got a 1 and then a 2, and now you have your 1, your sub micro wave 1. So if you miss this 1, if you miss this 2, if you missed this 2, then you can patiently wait for this 5-wave structure to unfold. And then you can buy back here on this 2. Let's throw the fibs on it just to see. So you've got your fib retracement tool, top of 1. So this one again went below 618. So if you put your buys here at 618 and your stop here at bottom of 1, then as of right now, you're, this thing's still working its way up. And it looks to me like it's impulsive. So, you can assume this looks like an A, B, C. So what this looks like here, and this is actually the trade I took this morning. This looks like an A, B, C. And I actually bought here on this 3-way, but we're not going to get into that. So to me, this looks like a 1, 2, 3, 4, 5. So that looks like a 5-wave structure right there. And I bought on this 4 at 342, and my stop is below this wave here. So I've got a conservative stop on this thing. So we should have, this looks to me like it's a 5-wave. So this could be another buy opportunity if it ends up bottom of 1, top of this. This thing could correct down. 618 would be 3478. So if this corrects down to 3478, that's just another, 1, 2, that's another sub micro count of this next count. So this is beginning your third wave of your one wave. So you've got your 1, 2, and now you have to have a 1, 2, 3, 4, 5 to complete this wave. So what I'm targeting on this buy here is this wave 3 at 53 cents, which would be from where I entered right here at 342. That would be a 50% gain. So that's how I evaluate my trade setups and my stop losses. And I think it's really important to emphasize, guys, stop losses. If you guys are trading, which I'm assuming you're trading if you're watching these videos, you need to have proper risk management. You just have to do it, or else you're going to kick yourselves and you're going to be way too emotional and you're not going to learn. But obviously, you're going to make mistakes. You're going to lose trades. There's not a single person in this world that wins every single trade. It's not possible. If somebody tells you they do, they're full of shit, point blank. I don't win every trade. I don't lose every trade. I try to have a solid risk management strategy and a solid plan in place when I'm evaluating an asset. That way I can reduce, the possibilities of a trade going against me. So hopefully this helps, guys. See you later.